Alright everyone, Cowboy Trades here and welcome back to the channel for a quick update on the cryptocurrency market. So I believe history is about to repeat itself over on the crypto market. So what we're going to do today is we're going to look at some interesting fractals on the total cryptocurrency market cap, the altcoin market cap, and then also the BTC USD pair, wrapping up today's video, looking at what's happening in the immediate short term and talking about what we can expect next, including a quick talk about the upcoming FOMC meeting that's going to be taking place on Wednesday. So let's start off on the total cryptocurrency market cap and look at what is happening right now. On the weekly time frame, you can see since the total cryptocurrency market cap topped out, we've been forming this beautiful descending wedge / descending triangle, depending on how long this takes to play out. Now, what you can see is if we do draw our Fibonacci from our bear market low in 2018 up to the swing high of the bull run in 2021, we have a 786 Fibonacci right at 721 billion. What happened in the past couple of months? We came down, we bounced on this 786 Fibonacci, we then proceeded to move to the top of this descending wedge, and in the past week we've broken to the upside. So while Bitcoin about 2 months ago broke to the upside of this trend line, the total cryptocurrency market cap has just done it in the past week. So has this been something that we've done before? Have we been in a bull run, topped out, and then in a bear market formed this descending wedge, bounced on the 786 Fibonacci, had a throwover, had a failed move equals a fast move in the opposite direction, and ended up back into the descending wedge? Now, that was a very, very specific sentence. And the reason why I was so specific is because, yes, we've seen exactly this before. If we look at the total cryptocurrency market cap following the bull run of 2015, drawing our Fibonacci from the swing low in 2015 up to the bull run top, what can you see that happened? Well, we topped out, we broke to the downside, we started forming this descending wedge in the bear market. Where do we bounce from? We bounced from the 786 Fibonacci, we then bled out. And what happened? If we zoom in, you can see we spent approximately 1 week underneath this. We broke out of it. We spent 1, 2, 3 weeks pushing up before on the 4th week, we melted back down into the trend line. So is it possible that this is the first week out of a multi-week rally where potentially we could push up a little bit further? We could push up to this Fibonacci, the 618 fib, at 1.222 trillion before breaking back down in the next month or so. Well, it's definitely possible. These cycles don't have to exactly line up with what previously happened. You can also take into consideration, hey, we've got an FOMC meeting in 3 days. Maybe it won't take, the 4 or 5 weeks that it took in the 2018 bear market. Maybe we'll come up to the 618 Fibonacci this week. Bitcoin will come up to around about 30,000 this week. And then when the Fed comes out, they raise interest rates by maybe 25 basis points, maybe even 50 basis points, which is not my prediction. But if something like that does happen, you could probably expect a quick rejection from the 618 Fibonacci back into the descending wedge, breaking back down into new bear market lows, at which point you could possibly expect something like a W pattern to mark the bottom before the total cryptocurrency market cap is ready to rally, just like it did in 2018. You can see the very, very similar pattern going on. Obviously, we're pushing up to the 618 fib, which we did not do in the 2018 bear market, but nonetheless, these are looking very, very similar. Now, moving on to the altcoin market, we're seeing a picture-perfect descending wedge in the altcoin market. You can see once again, since we topped out, we broke down, battered our head against the top of this trend line, formed this, descending wedge trend line, even though we had 2 touch points on here already. So this was already valid. We confirmed this trend line. We were bouncing around, and then quite recently, in my opinion, we're right towards the end of the bear market. I really do believe that we're only maybe 4, 5, maybe 6 months away. That may sound like a long time, but bear in mind, time will definitely fly for the rest of this year. I do think we're going to set up something like this, break to the downside of the wedge, and then, once again, we could expect a W pattern or something like this coming in the altcoin market. So have we done this before? Have we made a descending wedge? And in the bear market, we've had a over exuberant rally, pumping, 46% for the altcoin market. Bear in mind, this rally that we've seen off the lows is up 63% on the total cryptocurrency market cap. Have we done something similar to this before? Well, you can see over here, on the total cryptocurrency market cap, I should have stated this a second ago, we rallied about 31.5% after bouncing on the 786 Fibonacci. For the total too, we did something a little bit different. We back tested the bottom of this before pushing up, and what you can see is the altcoin market cap proceeded to pump 62%. Now, this is actually higher than what we've done quite recently over here on the altcoin market. We've broken up from the lows about 46%, and everyone's saying the bull run has started. People were saying the same in 2018 when we rallied 62%. People were saying, you know, I can't believe you would fade this. How can a altcoin market have a 64% pump and we're still in a bear market? This 65% pump marks the new bull run, and then boom, we obviously broke back down to the downside. These rallies are very, very normal for the cryptocurrency markets, my friends. We're not looking at the S&P 500. We are looking at the altcoin market. We've only had a 45% rally so far up to resistance, and this is exactly what we saw in the altcoin market in 2018, only we had a much bigger rally to the upside before topping out, coming into contact with this trend line, and then breaking back down to the downside, losing the support of this downtrending line of support. We broke to the downside, made new bear market lows outside of this descending wedge, and once we broke back into it and flipped it as resistance, we W'd out, just like we did on the total crypto market cap. We broke down beneath this wedge, we made a W under resistance, and when we broke out of these two descending trend lines, that was what marked the bottom was in. We have not seen that so far on the total cryptocurrency market cap. I still believe we're in a scenario like here where we have a few more months of breaking down to the downside. Maybe it's 2, maybe it's 3, maybe it's 4, maybe it's 5, maybe it's 6. We are in unprecedented times right now. We are obviously seeing a banking crisis that has not been seen since 2008. And obviously, if we scroll back for the altcoin market, if we scroll back for Bitcoin, we obviously don't have data on how these assets performed back then, because Bitcoin, the altcoins, they were not trading in the 2008 financial crisis. So I don't believe these cycles will play out exactly as they have before, but it is interesting to see these very, very clear similarities between what is happening right now in the total cryptocurrency market cap and the altcoin market that we have seen play out before in previous bear markets. So once again, something like this for the altcoin market cap is what I am expecting, and once again, something like this for the total cryptocurrency market cap is also what I'm expecting. Now, coming into Bitcoin, this fractal is not as nice as the other ones we've looked at so far. There are a few justifications for this. Obviously, Bitcoin is more mature. It's been around a lot longer than the altcoins. Could it be maturing? Could it be that it's doing slightly better than it did in 2018 because of the incoming altcoin regulation that we do have? Are the markets scared that the Fed is going to regulate altcoins? Are the markets scared of all these stable coins failing? You know, there are multiple reasons that you could argue why Bitcoin is showing some more strength than it did back in the 2018 bear market. But what we do have on Bitcoin is we have this same pattern. We've got this descending wedge, which does have a tendency to break bullish, but we did see a pattern very similar to this in 2018. Now, there's a few ways that you can draw this. If we're on the weekly time frame, the first trend line that comes to mind is this descending wedge right here. We did break to the upside of this before breaking back down, obviously into new bear market lows. There's also an argument to be made that, hey, you might want to look at something like this, which is not really a descending wedge, it's more of a channel, and then at which point you could argue that this was some type of triangle pattern. There's so many different ways that you can draw this. It's not really up for argument. It's really just what pattern you kind of like the most. I personally think, these trend lines are the ones that I would pay the most attention to in 2018. But you can see on these trend lines, no matter which one you're drawing, if you're drawing this one here, which I have slightly less weight associated with it, you can see that we did have a fake out, a pretty large fake out right here. And this was what marked the final fake out before new bear market lows. If we're looking over here, you can see this descending wedge. We had a pretty big fake out from this. We broke back down before making new bear market lows. On the monthly time frame, you could even argue something like this. This one fits pretty well. If we draw something like this, you can more or less see this was something like a descending triangle. Once again, there's so many different ways that you can draw this, whether you're connecting from candle bodies, whether you're drawing flat lines of support / resistance, whether you're connecting it to the wicks. There's many, many different ways that you can draw these. The patterns that we've got on the total cryptocurrency market cap and the altcoin market cap are much less ambiguous. I mean, these ones are clearly the ones that fit the most. With the Bitcoin market cap, once again, slightly up for debate which ones you want to draw. But nonetheless, we have seen these throwovers before. We have seen 48% rallies towards the end of Bitcoin bear markets, which do end up breaking down into new bear market lows. We have seen rallies in the altcoin market from the lows, up, 63, 64%. We have seen rallies in the total cryptocurrency market cap off the lows, up 35% or so. This is not the first time we've seen these huge rallies in the market. The only real difference is that if we're looking at the total cryptocurrency market cap, you can see that the total cryptocurrency market cap is bouncing much harder than it did in 2018. However, when we're coming over to the altcoin market cap off the lows, the altcoin market cap did not bounce, nearly as well. If we mark the lows from right here, I mean, if you're drawing from this high up here, it's about a 65% rally. If you're drawing from the most recent rally, it's a lot weaker. But really, this was the last rally before we broke down into new bear market lows. So I personally think it makes sense to kind of draw from what we've had over here, because we also have had in the altcoin market, if we're looking at the previous rally off that, we had rallies of 140%, whereas in this rally was only 65%. Even the rally before that was only 49%. I'm looking at the last rally which took place in the altcoin market off these lows. And yeah, I mean, we are not bouncing as hard for altcoins as we previously had, which explains why the total cryptocurrency market cap is bouncing harder, because Bitcoin is bouncing harder. Now, once again, you can put this down to regulation, you can put this down to Bitcoin maturing, but Bitcoin is bouncing quite hard right now. And I do not believe this is going to last forever. I think especially these fractals in the total cryptocurrency market cap and the total altcoin market cap are going to hold true. This week is going to be very important. I've already made a video on the channel quite recently talking about this huge warning for altcoin holders as we do run into this crucial line of resistance. Talking about resistance, if we come over to the Bitcoin weekly time frame, if you put a gun to my head and said, draw resistance now, I would probably draw something like this. If I get rid of the volume profiles for just a second, you can see all these previous wicks, candle body closes, range lows, range tops. They all kind of come into confluence with the ranges between 28,000, which we've already been rejected from. I say rejected from, I'm really just saying, like, in the lower, very immediate short term, we're getting stuck underneath these. But we are, of course, pumping up to this resistance right now. If I do zoom out, what is this orange trend line? This orange trend line is Bitcoin's 618 Fibonacci. Could this 618 Fibonacci at 28,800 be the local top for Bitcoin before we get rejected and start moving down? It's possible. Could we push up to 30,000 before the FOMC meeting? It is possible. As I've discussed in my most recent cryptocurrency video and in my most recent Bitcoin video, I am definitely sitting on the sidelines watching this play out at this moment in time. I'm not actively trading this. I really want to see what happens with the FOMC meeting coming on Wednesday. Now, in terms of what to expect for the FOMC meeting, I don't think we should expect anything drastically different from what we've been witnessing before, that nothing has changed for the Fed, really. A lot of people are talking about how quantitative easing is coming back, how the money print is coming back, so they're going to pivot the interest rates. I have a separate video coming on that very soon, talking about, is quantitative easing actually coming back, and looking at the factual data. Expect that to come out a little bit later today, a little bit after this video. But really, we've witnessed the S&P 500 rally 20% off its lows, and this kind of signals to the Fed that, hey, the markets are still strong enough, despite the interest rates being this high, that we can continue to raise the interest rates. If you didn't know, the stock market rallying is counterproductive to the Fed raising their interest rates. If the Fed are raising their interest rates trying to tighten monetary policy, but the stock market is rallying, that does not help their case. The stock market rallying really goes against what the Fed wants. So if the stock market continues to rally, this signals to the Fed, hey, the markets are still strong enough, people are still strong enough that they can invest up 20% in the stock market, creating one of the biggest dead cat bounces that we've seen in a bear market before. So if the markets are really this strong and still holding up that well, that signals to the Fed, hey, 25 basis points, we can still do it. 50 basis points, can we do it? It's up for debate, like I said. They are still looking at core inflation. That is one of the main metrics that Jerome Powell said he was going to be looking at. And while the CPI has been coming down slowly, the core CPI has really not edged too much away from its previous readings. We obviously had that revised data come back in for January, higher than expected. And since that hotter than expected core inflation and headline inflation, core inflation has absolutely not dropped whatsoever, but the markets have been enjoying this most recent rally. So this kind of signals to me, this kind of signals to the Fed, 50 basis points is possible to raise without crippling these markets. Do I think 50 basis points is coming? I don't particularly think so. I think it's probably maybe a 10% likelihood that they pause rates. I'd probably say maybe a 20% likelihood that we get a 50 basis point increase. And I'd probably say it's about 70% likely that we just get another 25 basis point increase. And maybe that will signal to the markets we're not ready for quantitative easing. We're not ready to pivot, and we're more likely to break back down to the downside as interest rates continue to go higher. So for today, my friends, that's all I've got. I will get a update out in the lower time frames, looking at what's happening for Bitcoin tomorrow. I, of course, am really waiting for this FOMC meeting before we start jumping into new trades, before we start doing too much in-depth analysis on the lower time frames. The higher time frames right now, as we're retesting the 618 Fibonacci, as we're retesting this key resistance level, this is, of course, in my opinion, the most important thing that we should keep our eyes on. We are also pushing up to an area of liquidity which has been trapped since June of 2022. So could we push up to 30,000? Could we grab a little bit more liquidity from this trapped liquidity cluster and then allow the markets and the market makers to push us all the way back down into new bear market lows for one final breakdown according to these fractals that we've seen in the total cryptocurrency market cap, in the altcoin market cap, and in the Bitcoin US dollar pair? It's very likely that history is about to repeat for the cryptocurrency market. So for today, my friends, that's all I've got. If you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click on the join button and become a member today. Also, be sure to come check me out over on Twitter at 618_cowboy. But I'll leave it here for you today. It's been your boy Cowboy Trades, my friends. I'm out. See you tomorrow. Peace.